Hello everyone, and welcome to the TradeShark blog. This week, I will demonstrate how traders can use TradeShark's predicted pivot points to gain an additional edge in the markets. Those familiar with pivot points understand their predictive nature, in that they provide support and resistance levels in advance of the trading day. However, TradeShark has taken things much further by incorporating actual predictive data derived from TradeShark's neural network technology into the pivot point calculation. Normally, pivot point formulas would be completely constructed from past high, low, and close prices, whereas TradeShark's pivot points are calculated by using forward-looking predicted data. The result is a more reliable indicator that, when combined with TradeShark's other predictive tools, gives traders a significant edge in the market. Additionally, the accessibility of these tools allows traders of all experience levels to consistently make money with their trading. To demonstrate how simple and effective these tools can be, let's take a look at this chart for the British pound US dollar. Now, this chart currently displays three of TradeShark's predictive indicators: the TradeShark weekly pivot point, which includes the pivot, as well as three support and resistance levels, as well as TradeShark's neural index, a highly accurate 48-hour forecast. Lastly, we see TradeShark's predicted high and predicted low values, which offer excellent intraday levels to take or add to an existing position. In this example, we can see that traders would look to go long the market as long as the closing price is above the pivot point. Additionally, we would want to see a matching neural index signal, suggesting that prices should move in that corresponding direction over the next 48 hours. Well, let's see how this plays out. Over the last month, a trader would look to go long after this trading day here, looking to buy at TradeShark's predicted low. We can see that this would have resulted in about a 550 pip move higher before the neural index, the 48-hour forecast, became bearish. Additionally, over this time period, a trader could look to add to their current position on this trading day here, as well as here and here. Not only that, we can see that the market doesn't push past those levels very much at all, allowing a trader to take a significantly sized position and run a very tight stop loss. This is why traders who have accurate tools, like tools found within TradeShark, have a significant edge in the market and can consistently profit off of market trends as well as reversals. Keeping with this trading strategy, notice what happens when the market closes below the weekly predicted pivot point. With a corresponding neural index signal, a trader would look to, again, now take a short position on the market. We can see that that resulted in an excellent entry into this market, with prices going sideways for a few days, but remaining below the next week pivot and eventually trading much lower. Again, this is why traders have a significant edge in the market by utilizing predictive indicators found only within TradeShark. Moving to this next chart example, we can see how TradeShark's technology can help equity traders make much more profitable trading decisions. We can see Darden Restaurant opening up above the weekly pivot point, suggesting traders should look to take a long position on the market. As you can see, TradeShark's predicted low values do an excellent job of signaling where traders should look to take long positions on the market. Within one day, the market moves up 3.5%. But notice how the market consistently closes above the weekly pivot point until this trading day here, which actually has a matching 48-hour forecast from TradeShark's neural index. This would allow traders to add to their position, similar to the last example with the British pound, allowing traders to capture a 9.6% move higher in the stock over the course of 15 trading days, or about $6.25 per share. This is why traders who utilize TradeShark's predictive technology have such a significant advantage in the market. Instead of relying on past prices and reacting to what the market is doing, traders are prepared not only for the next week and the next couple days, but for even the next trading day, knowing where to be a buyer and where to be a seller in the market. In addition to the weekly pivot points, TradeShark also includes monthly and quarterly pivot points, which are very helpful for longer-term position traders. In this next chart example for light sweet crude oil, we can see the market opening up below the monthly pivot point. A longer-term trader would look to possibly hold some existing positions or possibly take a new position short the market. If we utilize TradeShark's predicted high, we can once again see how effective these tools can be. A trader could easily put in a sell order at the predicted high, having all of the predictive tools signaling the market should move lower. In just 3 days, the market moved down 9.2%, over $5,000 per contract. We can also take a look at the quarterly pivots. Depending on your trading style and how short or long term you are, you'll want to get familiar with working with these longer term pivot timeframes. However, any trader, whether they trade stocks, Forex, or futures, can certainly benefit by using modern technology and predictive neural networks to assist them with their trading. I hope you've enjoyed this presentation of TradeShark's pivot points. For additional information on TradeShark's technology or other predictive indicators that are available, be sure to visit www.tradeshark.com.